You can certainly use that money to pay off some of your debts that you have in the limited company.
Hi guys, welcome back to another episode of our podcast, talking all things mortgages with Reside. Earlier in the series, we discussed just a beginner's guide to buy-to-let. And buy-to-let is sort of, there's loads of different options with buy-to-let, and we did say we was going to cover off some more of the complex options, so that's what we're going to do today. We're going to talk to you about a bit of complex buy-to-let. I think the main one that we see now, and is sort of it's been getting more and more popular over the years, is a limited company buy-to-let. Steve, do you want to explain what a limited company buy-to-let is?
Yeah, so essentially it's where you set up a company and that company owns property. So it holds ownership of property.
Perfect, nice and simple, very brief. That's what we like. In terms, if we dig a little deeper, Rav, when you have a limited company, it's called an SPV, a special purchase vehicle. Do you want to just give us brief overview of what an SPV is?
Special purpose vehicle.
It's a special purpose vehicle.
What did I say?
Special purchase.
Same thing, isn't it? What is it? Special purpose vehicle. Yeah. I've been saying it wrong for years. Special purpose vehicle. Rav, what is a SPV?
A special purpose vehicle is exactly just like a normal limited company, except that it has a particular purpose attached to it. In this situation, it's about buying and selling a real estate, or buying or letting out a property or dwelling. So the whole purpose of that particular company is to just deal with real estate, buying, selling, or letting out. As simple as that.
Perfect. And I've not started very well on this, so I hope I get this right. But when you do it, sort of when we come to apply for a mortgage, we need an SIC code. Yeah. I'm not going to guess what that means, but
I'll do it. Standard Industrial Classification Code.
Cheers, Darren. See, I'm learning stuff today. So yeah, we need there's specific SIC codes that we need that relate to the SPV to be able to apply for the mortgage. Is that correct?
The holding of real estate, right?
The holding of real estate.
The holding of real estate. You guys should be hosting this one. Why, Darren? Why would someone buy through a limited company buy-to-let as opposed to just buying it in their personal name?
Well, one of the main reasons it's tax benefits. Now, obviously, when you have a limited company, it'll be subject to corporation tax, which is, as you know, will be a lot lower than if you held a property in your individual name. I mean, there's going to be downsides to it as well.
Yeah.
We come across.
We'll come on to the downsides in a second.
Yeah, we'll come across a lot of people looking to who've just begun, and they've got future plans to hold a whole portfolio of properties.
Yeah.
And typically that'll be better to have in a limited company just because of its tax benefits.
Tax efficiency. Rav, in quite a hot topic at the moment with the budget coming up tomorrow is inheritance tax. Is there any benefits of owning your property through a special purpose vehicle rather than yourself in terms of inheritance tax?
Yes, there is one, because inheritance taxes generally can be avoided, but it can be subsided in a sense where if you own a property in a limited company and you eventually want to give those properties to your children or to your family member, in normal situation they would incur an inheritance tax because they are inheriting in the event of your death or such situation. In this situation, if you own the property in limited company, the company is the legal owner of the properties, and whoever the beneficiaries in this situation could be your family member or your kids. You can make them a shareholder in that company or a director in that company.
Yeah.
And eventually they would become the owner of that company. So that way, you are not paying inheritance tax as such that you would have if you had owned the property in a personal name.
Yeah, I think that's another benefit of limited company. There's a lot of flexible ownership options, whereas it's very rare, but not for a standard buy-to-let, you can normally have 2 up to 4 people. But with a SPV, you can sort of have various directors on the company that own the property. So I think that's quite a good benefit. What is, I think another one is claiming mortgage interest. Ducky, what's the benefit of, what do I mean by claiming mortgage interest?
Yeah, so the interest on the mortgage that you pay for your limited company buy-to-let becomes a cost to the company. So you can speak to your accountant about how you offset that, claim it back.
It just classes as like a business expense, doesn't
Yeah,
it?
exactly.
Really?
You used to be able to
So
do it under your personal holdings, but since all these changes came about, it's all shifted. So you have to do it under your limited company.
perfect. And then lastly, Rav, I'll come to you on this one. There's a small benefit to like limited liability as well, isn't there? If you own it through a limited company.
Yes, the word limited in itself, which means that whatever the assets and the liabilities are, it is limited to that particular company, and you are not personally attached to it. So therefore, any issues or any ownership that the company owns only owns to the value of that assets owned in that company, which is the value of the real estate in this particular situation. However, there is a caveat to it, because if you are getting a mortgage under a limited company, often banks will ask you to give you will ask you for a personal guarantee
Yeah.
for the value of the debt or the loan that you are taking. So whilst it is a limited in sense, it is not truly limited because you have still given a personal guarantee to it.
Yeah.
Once the mortgages are paid off and it's fully paid, there's no lending on it.
Yeah.
Your personal guarantees are not there. That's when you see the true benefit of limited nature of the company.
Some lenders will also credit score the directors as well, aren't they? So
Yeah.
it's another point.
Cool. So I think we've covered off quite a few advantages there. In terms of disadvantages, what would we say would be a disadvantage of doing it through a limited company buy to let?
One of the main things I can think of is that usually with typical buy-to-let limited company lending, there's specific products with, and not all lenders provide products to facilitate limited company mortgages, and they usually come at a sort of higher rate of interest as well if you were to buy an individual name. So that's one of the disadvantages of a limited company.
Yeah, there definitely is less favourable mortgage options when you're doing it through a limited company buy to let. I think one of the main, it's not a disadvantage, but it's just there's added sort of admin and sort of fees as well. Like you don't have to use an accountant, but it is advisable to use an accountant. So you might just get some increased costs in terms of accounting and admin. What about stamp duty, Ducky? Is there any disadvantage or anything clients should be aware of when thinking of doing it for a limited company?
It's the same as any additional property, so you're subject to the additional stamp duty rate, more tax to pay, but yeah.
And then, Rav, what about, is there any sort of, if you own a company in your, if you own a property in your personal name and you sell it, you have to pay, you get like a capital gains tax allowance.
Yeah.
Do you do that is that there on limited company?
No, unfortunately, limited companies do not get any allowance as such. I can't remember the exact figure, but I think it was 325,000 if you own an asset under your personal name. So you get like an allowance of 325,000 effectively for any gains up to 325k. You wouldn't have paid tax if it was owned in personal name, but in limited company you would pay even if the value is appreciated by £1. You still pay a capital gains tax on it.
Cool. And then, Rav, how does declaring your income work with a limited company? Because obviously it's a company, so you get the rental income.
Yeah.
Is it just a case of you drawing down salary and dividends, or how does that work?
Well, you can draw down a monthly salary based on the rent that you're getting. You can draw down a monthly salary. That's one form of drawing income from your company. Your salary that you draw will be subject to your income tax at whatever rate you are eligible for. So if you're a basic rate taxpayer, you'll pay 20%, so on and so forth. Right. The other form is all the rental incomes that you have received, the profits that your company has made as a result of rental income, you'll draw down as a dividends. Normally, the rate of dividend, the tax rate of dividend is cheaper, so I would say lower rather than cheaper. So it's better to draw some salary, small amount of salary, if this is your only source of income, and more of dividends. Right, and other way you can draw is take out pensions. So any income that you draw, you're putting straight down into your pensions, and that has a benefit around taxes as well. Which obviously, if that's the right thing to do or not,
Yeah.
you've got to speak to a chartered accountant for that.
And then with the profits, do you have to take them out, or can you retain them?
No, you can keep it forever as long as the company retains the profit. Your tax liability only occurs when you start drawing income from
Yeah.
it. So if my company's made 100K and I've not touched that money, there's no tax payable. Of course, you have to pay corporation tax because
Yeah.
that's based on profit. But as long as I'm not personally drawing any income, it doesn't attract any taxes, and you can keep it for however long you want
Yeah. So essentially, you'll always pay your corporation tax on the profit.
on
That's
the
standard.
profits.
But if you don't physically draw any down, you could just keep
So
it.
you're
in
not
there.
taking salary, dividends, or pensions. You're not paying the personal tax on that income drawn.
How about if, for example, you've got a little portfolio, you've got 5 or 6, you've got money in there, you've not, but you want to take it out to buy a new property to add to the portfolio. Is is that taxable, or can you use that to buy new property as an investment?
No, because see the tax is generally attracted when you draw an income
Yeah.
or when you attract an income, because you're using the and it's important to remember it's not you who's doing that, it's the company who's
Yeah.
doing that, right? So whatever that tax is to do with the company. So if the company has got profits, they're reinvesting profits back into buying another asset, right? Which obviously is not taxable in that sense, but because they bought another asset, that will increase the revenue in sense of rental income, and therefore your corporation tax will increase however much your profits have increased.
And then just last one, sorry, Rev, I keep pestering you on this, the tax and stuff. Say, for example, you've made 100K, like you say, and you want to use that to pay off some of your mortgages to reduce your liability, to reduce your debt. Can you do that, or is that part income and taxable?
Well, I'm not 100% sure whether
Okay.
that's taxable or not, but you can certainly use that money to pay off some of your debts that you have in the limited company. In terms of tax side of it, if you are the one who's initially loaned the money to the company, you're taking, and that profits that's been made, you're taking that profits back. Effectively, your company is repaying the loan to you.
Yeah.
That isn't taxable in that sense, but any interest, if you have earned as a result of the loan, interest element is taxable.
Okay, cool. It's a bit of a minefield. I'd say that it's always worth seeking specialist advice from your accountant
Absolutely.
on those kind of things, isn't it? Darren, someone they own 2 buy-to-lets, they then set up in their personal name. Can they transfer them to a limited company special purchase vehicle if they set one up?
Can you correct him?
Yeah, special purpose.
That's what I said. Special.
But
No, he didn't.
I said purpose. I looked at the camera when I said it.
Okay, never mind. We'll go
SPV.
SPV. I think just going back to the point of, I think it's at this point when if you're looking to do something like that, you need to speak to your accountant, you need to speak to a tax specialist. One of the main reasons that you need to do this is because if you own it in your individual name and you look to sell that property, you're probably going to have a capital gains liability. And then if you're transferring it to a limited company, we say transfer, but technically it's going to be a purchase, purchasing from one entity to another. You are going to be liable to have stamp duty
as well. So it's not. I'm not going to say it's not easy, but there's implications that you have to consider, like your capital gains tax and stamp duty. You could end up paying a lot of money,
and it might be worth it in the long run if you're looking to grow your portfolio and that's the route you want to go down. But if it's not really common if you only have 2 or 3 and that's where it's sort of going to stay for a while. So always.
That's why it's best to speak to a specialist, because in some circumstances it might be best to keep it in your personal name. Everyone's situations are different, aren't they? So you need to seek professional help.
I think a lot of people, they sort of, it's like a buzzword, isn't it? Oh, I want to buy a limited company. Why? I don't know. Like you need to research it, find out the tax implications, and make sure you know what you're doing. I think one benefit is that it doesn't, say if you buy your first property as a buy-to-let in a limited company buy-to-let SPV, it doesn't affect your first-time buyer rights. So you could go and set up a portfolio. You could have 10 buy-to-lets under your limited company, and you could still go and buy your first property and get the benefits of the stamp duty and stuff. I think that's a really cool.
No, it is really good. You just have to be careful with which lenders would allow you lend to you, basically, because as a first-time buyer, first-time landlord, there's lots of lenders who won't lend to you.
Yeah, I think there's one, isn't there?
Yeah, there's a few,
Yeah, a
but
couple.
there's some that don't.
Is the process of getting a mortgage for a limited company, does that differ? Or I know obviously you have to do it under the special purchase vehicle, SPV, but in terms of the actual physical application, is there much difference between a normal mortgage application, or is it pretty much the same?
No, minimal. Like you and Darren said earlier, that there's selected lenders and special products, so you're quite limited on that side of things anyway. But in terms of additional processes, it's just a couple of extra bits of admin on the application side of things. So we just need the certain codes, your limited company name, things like that. Maybe a couple more bank statements relating to the limited company. Other than that, it's pretty straightforward. But then when you get to the legal side of thing, the solicitor would have a few more things to do as well. So same process, couple of extra bits, limited products and lenders, and then additional legal work really. But nothing hugely.
Perfect. Nice one. I just want to go back to something Rav said earlier about directors' loans. What would a reason for a director's loan be? Would that be you pay for the deposit of your first one, so you need 50k deposit?
Yeah,
you've put that from your personal account into the business. Is that what would be considered director's loan?
that's exactly it, right? So like as any given, you as a person would have saved some money and you would have used that money as a deposit to buy. Similarly, the company needs to have some money, right, and have to go out and buy a property. Except that company isn't a living person who has saved, so the initial pot of money that you would give to the company would be treated as like a director's loan. It doesn't always have to be a director's loan. You could give it like an interest-free loan. You can just give it as a grant. There's many ways to give it. Often you'll give it as a loan because obviously you want that money back in your personal name. You could also charge an interest within reasons. So you could say
charge yourself interest.
So your company is effectively paying that interest because that interest on that loan becomes an expense, which obviously reduces your profit, and therefore has reduction in, you pay less corporation tax. But because you on the personal hand, you're earning interest, you would get that. You pay tax on that interest.
Perfect. And lucky lenders are okay with that, like a director's loan as a deposit?
Yeah, pretty standard.
Totally.
There might be a couple that ask extra questions, but yeah, it's pretty standard.
Perfect. So I think, again, to summarise, it's a very good tool if you know what you're doing, but then you've got to research it, speak to the right people, tax advice, accountant advice, and a mortgage broker, and get cracking. Did you want to add something, Dazza?
Yeah, I was just going to say, I don't know whether we touched on it or not, but I think the SIC codes situation.
What's the SIC code? Sorry,
Standard Industrial Classification Code. Anyways, that's quite important because lenders have their own specific criteria around this. For example, here's me just name dropping a lender, TMW. They won't accept a limited company application where there's a mixture of a SIC code that they don't allow. I think they have 3 or 4 that's allowed to be used, but if you have something else like that provides goods or services for something completely different, the chances are they're just going to decline the application from the outset. So it's just important to make sure that you speak to a broker, make sure you have the right SIC codes in place.
So just one thing that's just made me think of a question as well is we've had customers where they've got a limited company, like they might be a business person, they've got a limited company, and they think they can use that account, can't they? But so this is, you have to set up a separate entity, SPV, special purpose vehicle, with the correct SIC codes, and that's just a brand new separate thing that they took for the buying and selling.
And it's not to say that there's some lenders out there that might accept.
Some absolutely do.
It's just it might just limit your options with which lenders.
Which you don't want to do. And it keeps it nice and separate between the two, doesn't it? And it's not, how hard is it to set up a limited company? It's pretty easy.
Yeah, very easy.
Yeah, you can do it yourself, can't you, on company's house, or you can get your accountant to do it and get charged. Cool. Right, nice one, guys. Thanks for that.